Right, traders. Welcome to the K5 Trading, another episodes. In this episode, we will be talking about ASX 200, or we call it Australian Stock Market Index, Key Benchmark Index, or XJO. We would like to see how the index is performing in the past and what we expect in next week or coming weeks. So let's start with the marking our structure first and our key levels. So first of all, you can see that on 9th of August 2021, the market formed a kind of a peak hit right up here in this area. And that could be our supply zone. So with this supply zone, I also like to see that's where is my last break of the structure. My last break of the structure was in this area. And before this break of the structure, I was here. Another break of the structure was there. So that was my bearish break of the structure. Before this peak, this was my big impulsive move. And in this impulsive move, I like to see which are the key areas where I can expect market to come through. So I will start with the top level. This fair value gap has been mitigated. This one has been mitigated. This is also mitigated, and this one has not mitigated just yet. So let's mark this one first. So we will mark our first fair value gap in this area. Okay, that's the one. The market touched in this zone twice, but it didn't penetrate deep inside, or at least 50% of the zone. So I still consider this is a valid zone. And I can also see when both are time, when it's actually penetrated, it's a kind of created an equal low, or you can call it double bottom, whatever you want to call it. And I'm actually expecting whenever this kind of situation happens, the market will actually come and penetrate those equal lows or this double bottom before move upside. Okay, so that's our first zone. Now let's look at the left. Should we mark this big red candle as our supply demand zone? Yes, we can. I won't be marking this one because that's doesn't have a fair value gap above, and this one already mitigated. Another one here, which is 5664, quite low, but that's all right. We don't want to go that far. We only want to be stuck with this area here. So let's mark this demand zone. Bullish point of interest. After marking this one, now we want to focus in our this sideways market movement. So guys, the one important point with this break of the structure to the downside, our key leg is between this yellow and this noble semaphore. So this is our key leg. And we can see market is at the moment for last, how long? Almost 1 year, more than 1 year market actually is trading inside of this big range. So the best way to trade on this one is if we are, as we know, that's the penetration of this, our fair value gap is due, and that's penetration can happen anytime. Market may actually just go a little bit up and then come down and in this zone here. Also, you can see there are few liquidity areas. One of the liquidity areas is right up here. Okay, so that's our liquidity areas, and I'm expecting market to penetrate this one as well and get this very small rally kind of a demand zone and push upside, all right, or rally upside. So that's what I'm expecting on the weekly time frame. Now let's have a look into the daily time frame. Okay, so on the daily time frame, our last break of the structure is just up here. So if I can mark my last break of the structure inside that area, and also you can see with this break of the structure, what I can also see is market basically break the previous high, kind of a sweep this liquidity and gone up, and now it's coming down in this leg. So after this, with this bullish break of the structure, even though it's not tested, we don't have any chalk here yet, but just a minute, we will see in a sec. Need to save this as a template. Save as a template. Okay, so with this break of the structure, the last one was around here. So we can see this is a kind of a chalk. If it is a chalk, then market actually made a top, then come down, failed to make another top. This break of the structure once again on this side. So we can see very, very clearly that our entire price movement is inside of this range. Okay, so if inside of this range, we need to know where the market potential key reversal areas are. The first key reversal area is this one, because this one and that one is already filled. So we can actually expect market to come in this demand zone. So we can mark this demand zone right now in that manner. Bullish point of interest. Okay, once the market come in this zone, which is 7,400, 7,040, we will try to detect a reversal, and our aim should be somewhere around here. First of all, it's going to grab this liquidity right up here and come into this fair value gap, or this supply zone, which is a drop-based drop. So somewhere around here, I'm expecting market to come back. How do we want to trade this one? Watch out this area right up here between 7063 and your 7,000. So watch out this zone, and in this zone, what we're going to do, we are expecting a W pattern, a reversal pattern, and that reversal pattern will tell us market when the market is ready to move upside. Okay, guys, so this is what I'm expecting on the daily time frame. Currently, this is a big internal move right up here, and it's between 7,060 to the 7,000. I'm waiting market to give us a reversal for upside move, and that will be our short term with 7,200 or a few 100 points we can capture on this one. So guys, this is what I'm expecting on the ASX 200. You can also trade options on this one, and you can also buy put options, or you can sell the call options, or you can sell the call credit. And you can just do the credit spread. All right, guys, is anything else do you want me to cover? Please let me know in the comments, and I will try my best to cover those content. Happy trading, and keep an eye on ASX 200. It is reaching a key area where is a good trading opportunity is coming. Happy trading. Thank you.